Hi there, welcome to Kneppy Invests. Sometimes as investors, we can let bias rule our investing choices. And one of the things I like to do is to challenge some of my biases on occasion. And that's definitely true for the company I'll be featuring in this buy, hold, or sell video. That is Woolworths Group. My bias against this company is that I do think it's way overvalued and there's absolutely no reason why I should buy into this company. So I decided to do this video to test to see if my biases hold water. What I'll be doing in this video is I'll be looking at the financial state of the company, the valuation, and the sentiment. And on these three factors, I'll be figuring out whether Woolworths Group is a buy, hold, or sell. If you don't know what Woolworths Group does, either you come from overseas and have never stepped foot in this country, or you've been living in a cave the past 100 years. This company is a retail company. They are a supermarket chain called Woolworths. They also have another chain called Big W. Those are the two biggest retail ventures they're in. They've just spun off something called Endeavour Group, which is, I believe, hotels and gambling, the slot machines, that sort of thing. So they spun that off in the last few months. Woolworths Group was founded in 1924 and they listed on the ASX in July 1993. So they have been on the ASX for 27 years. The CEO is Bradford Banducci. He's been the CEO since February 2016 and he has largely led the turnaround for this company because back in 2016, the share price of Woolworths Group got as low as, I think, about $20, and we have seen share price rally since then. The two largest shareholders for Woolworths Group are BlackRock with 3.6% stake, and the Norwegian Sovereign Fund, which has a 1.5% stake in this company. And the current market cap of Woolworths Group is $50 billion. That's at a share price of $39.95. That's the share price at close of trading on the 8th of October. And the ticker code for Woolworths Group is one of the best ticker codes on the ASX. It's WOW, or WOW. Now to the financials, and this is where we figure out if Woolworths Group is a buy, hold, or sell. This is not, by the way, recommendation for you to buy, hold, or sell this company. I am looking at this from my own point of view and how I judge the worthiness of companies to be held within my own personal portfolios. The revenue of Woolworths Group for financial year 21, $55.7 billion. That compares to the previous year, $53.1 billion. Gross profit margins steady around 29%. That seems a little bit higher than I thought it would have been. But their overall margins is fairly low, particularly in their supermarket chain. Whenever they sell some food or whatnot in the supermarkets, the margins on those would be fairly low. Profit after tax, this is from their continuing operations, so it doesn't include the Endeavour spin-off, $1.6 billion. That's up a fair bit from the previous year, which was only $938 million. Operating cash flow, steady from the previous year at $4.6 billion. They do have $14.5 billion of net debt, but that also includes $12 billion of leases. So I'm not sure you can really define that as debt, but according to the accounting standards, that is debt. PE ratio seems a little bit high for a company that isn't growing much at 31.3, and that's the reason why I do have a bit of bias against this company. For a non-growth company, PE ratio of 31.3 is really high. Price to sales ratio also, compared to past price to sales ratio of this company, is on the high side at 0.91. Now let's look at the historical financial state of Woolworths Group, looking at 10-year revenue, profit, and operating cash flow. I like to see all three of these metrics increasing through time. And for Woolworths Group, we have seen operating cash flow increasing at 4.5% per year. That is most of the time my favorite metric. I do like to see operating cash flow growing through time. The second thing I look for here is revenue growing through time as well. It has only been growing at 0.6% per year. I would prefer that to be a little bit higher for a company. And one of the reasons why operating cash flow has been growing at a quicker rate than revenue is more than likely some of the margins in the business have increased over the last 5 to 10 years. I did read something maybe a few years ago that said that Woolworths and Coles have the highest margins for supermarkets in the world. Whether that still holds true is a question, but that just tells me that the margins they have in the business right now are probably not sustainable for the short to medium term, and profit have not grown at all over a 10-year period. In fact, it's gone backwards slightly, growing at negative 0.2% per year. So looking at the historical financial state of the company and the current state of the financial state of the company, is this hold, buy, or sell? Now, I would probably consider this almost a sell, but just looking at the operating cash flow, growing at 4.5% per year, I'm going to call this a hold. To look at the sentiment of a company, I'm going to view the weekly and daily chart for Woolworths Group. The weekly chart here goes back 10 years, and what I want to see here is the share price growing through time or in an uptrend, which tells me there is a bit of positive sentiment in a company. And you can see from 2014 to 2016, June of that year, there was definite negative sentiment because the share price fell from $38 to less than $20. And during 2016, that was the year where the company was not profitable, and we also saw a decrease in the operating cash flow and revenue of the company, and that's the year the new CEO became the CEO. So they must have changed CEOs during that year because of the difficulties in the company. I've just mentioned that that CEO, Bradford, whatever his last name is, has done a fairly good job. He's turned this company around, and you can just see that in the share price growth. Share price has more than doubled in the past 5 years, from less than $20 to a current share price of $39.95. Overall, in this the long-term chart, the definite remaining positive sentiment behind the share price. If we see the share price move below about $37 to $36, I would start to question whether the positive sentiment has turned, but we're not at that point right now. There is a bit of a double top at $44. We saw that share price reached about a year ago, just after or just before COVID-19 financial panic, and then again a few months ago. And again, if we see the share price move above $44, that would be a bullish sign, but I'd also say the valuation of the company might be a little bit stretched at that point in time. Though when I look at the weekly chart, I'd say there is still some positive sentiment during the long term, the weekly chart. As we delve into the daily chart here, I can't really say the same thing. There's no discernible uptrend or downtrend here. Share price is oscillating. In fact, it's trading between about $44 and $36 during the past 18 months. Share price did reach a high of $44 just before COVID-19 and fell just like every other company did on the ASX, but has rallied since then. Again, no discernible uptrend in the share price here or downtrend, so I can't say there is still positive sentiment on the daily chart. I'd say sentiment is neutral here, and because there's positive sentiment on the weekly chart but neutral sentiment on the daily chart, well, based off those two things, I'd say sentiment is right now for Woolworths Group a hold. Now let's look at the valuation of the Woolworths Group, and the reason I wanted to wait to last to look at valuation is because this is where my biases are affecting my opinion on this company. At a share price of $39.95, that's at end closing on October 8. Price to operating cash flows 10.9. I would consider that higher than I would like for this sort of company. P ratio is really high for a non-growth company at 31.3. Price to sales ratio is at 0.9, historical high levels for this company. And the price to book ratio has been affected by the spin-off of Endeavour Group. That's at 36.7. So I'm going to rule that out now. But when we look at some of these other valuation metrics, definitely Woolworths Group right now is fairly stretched. But this is in isolation. You just can't judge the valuation of the company just looking at this. You also have to look at the historical valuation metrics and also compare the growth rates of revenue, operating cash flow, and profitability to the share price and market growth rates over the past 10 years. So let's do that now. First thing I want to look at here is the relative valuation of Woolworths Group. So I'm going to be looking at P/E ratio, price to sales ratio, and price to operating cash flow of this company over the past 10 years. This is in 1 year increments. And what I don't want to see here is any of these lines going or sloping upwards with time. And that would tell me there is a fair bit of multiple expansion happening. And that's not always a good thing. You want to see financial expansion happening before multiple expansion. If you do see a lot of multiple expansion happening, that could tell you a company is overvalued. When I look at the price to operating cash flow, which is the blue line here, it's going sideways with time. There is no multiple expansion when you're looking at operating cash flow of this company. It's been increasing at almost the same rate as the market cap and the share price. There has been a little bit of multiple expansion when you look at the P/E ratio and price to sales ratio over the past few years, but it's not excessive. So at this point in time, my potential biases in this company might not be valid. In that previous slide, we can make some conclusions about whether there has been any multiple expansion happening with Woolworths Group over the past 5 to 10 years, and we can confirm that by just comparing the growth rates of revenue, profit, and operating cash flow to the share price and market cap growth rates over a 10-year period and 5-year period. Now, based off price to operating cash flow, a line which was going sideways, we know that operating cash flow has grown at very similar rates to the share price and market cap. That's what you want to see. So what the market is doing over the past 10 years, it's looking at the operating cash flow growth, and it's been pricing Woolworths Group based off that growth. It's been ignoring revenue growth and profit growth, because when you look at the revenue growth, 0.6% per year compared to the share price growth over the past 10 years, which is 5.1%, and the market cap growth, which has been 5.5% per year, you can see the share price has been growing at a quicker rate than revenue. The market is not pricing Woolworths Group based off its revenue growth. It's pricing it because of its operating cash flow growth. It's a very similar story to what Amazon, or what the market, or how the market is pricing Amazon. Now, we can even go further and look what's been happening over the past 5 years, since 2016, when this company was under pressure and the share price got below $20. And over the past 5 years, revenue has grown at 0.8% per year, profit at 10.9% per year, and operating cash flow at 14.4% per year. Share price and market cap have both grown at 16.5% per year, which is very good growth rates for a non-growing company. And when I think of Woolworths Group and I say non-growing, I'm talking about revenue growing only 0.6% per year over a 10-year period. But this company has improved their margins, so we have seen profit grow over the past 5 years. And because of that better margins, operating cash flow has grown at 14.4% per year. The question is whether the company can continue the growth rate in operating cash flow and profits over the next 5 years. If it can't, the share price and market cap more than likely won't grow at the rates we've seen over the past 5 years. Now, the way I'm looking at this is my bias in this company was based off revenue growth, not operating cash flow growth. So I do think I misjudged the story in Woolworths Group, and I don't think it's that too overvalued at current prices, simply because the share price and market cap have grown at very similar rates to the operating cash flow. Based off my preconceived ideas of Woolworths Group before I did this video, I probably would have rated the valuation of Woolworths Group as a sell. I think I have to change that now to a hold. So that's 3 holds for the Woolworths Group. If I was a shareholder of this company right now, I'd probably just keep on holding it. There's no reason to sell out just yet. I do think there is going to be some pressure with the margins in this company over the next 5 years. I don't expect revenue to grow all that much because Woolworths Group and Coles have reached maturity. There is the threat of some more competitors in the market over the next 5 to 10 years. I don't know if that's going to happen. And unless we see a significant population growth in this country, there's no reason for the revenue to grow all that much. The only way this company could grow their profits and operating cash flow is to decrease costs or increase their margins, and more than likely, I think they will struggle to do that. The other thing I would be interested in with not only Woolworths but also Coles is the potential for completely automated stores. I do think that's in the future for these companies. And if I did have an automated supermarket near me, I'd be using it every single day. That's all I have for this buy, hold, or sell video for Woolworths Group. If you do have different opinions than I, make sure you leave it in the comment section of this video because I would love to hear them. I'm always privy or open to hearing what other people are thinking. That's how we grow as investors. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.